Hello, you're tuning in to AWANI Review with me, Cynthia Ng. Joining me on the show today is Kelvin Lee. He's the co-founder and CEO of Alta, formerly known as Funnel. Now, Alta is a Singapore-based private investment platform. Started in 2015, Alta has grown to become the largest marketplace for alternative asset investment in Southeast Asia. So, Kelvin, thank you so much. I knew you flew in from Singapore partly for this, so I really appreciate you coming on the show to talk to us more about Alta. Thank you so much.
Thank you for having me.
Now, I'd like to start with a few basics. So over the years, we had lots of founders on the show that talk about why they started the business, and more often than not, it has to do with something or a problem that they are trying to solve. So what's the story, Kelvin?
Wow, big question. I think my background, traditional capital markets banker. So I left what would be a prestigious investment bank, JP Morgan, to really deal with what I saw was the challenge of my generation and the next generation. I did a lot of big IPOs, had a lot of experience built up in the capital markets. But when I really looked at friends who were starting companies at a point in time, this was back in 2012, 2013, 2014, the formative years of my thesis, we could not, at the investment banks, help them get access to the capital markets, raise funds. And I started drilling deeper into the purpose of the capital markets or even exchanges today, right? And found out that in most countries at least, exchanges should help with jobs creation, should help with connecting capital from providers of capital who are investors, and direct them to companies who need capital for growth. And these companies that my friends were starting were arguably going to be the next generation, next wave of employers who were going to employ other friends. And they were not getting the support, and the capital markets were not supportive. And the other end of the spectrum, from my perspective, having worked in the investment bank for so many years, I could not myself get access, right, invested into the best performing asset class, which is private equity. Not just because of who I was, which is determined by regulatory barriers. It was really also because there was a minimum investment ticket. So the threshold, right, was too high. So if you want to make it accessible, after using technology to help make it more accessible, the minimum ticket cannot be millions of dollars. It has to be really within the reach of the common person, right? So I think that's where we focused a lot of time on the early days. 2016, looking at opportunities whereby you have lead investors, Kerajaans of the world, doing due diligence, and at the same time, we wanted to get invested ourselves, right? How can we get access to the same kind of deals that Kerajaan invested in, right? So that's how we started.
Okay, so it's primarily driven by the fact that a lot of smaller companies can't get access to capital.
It may not be smaller. I think the idea here is that generally companies have been staying private longer. So I think historically, maybe 20 years ago, the average age of a company by the time they went public was 3.5 years. So they're relatively young and they went public. Today, I think the average age of a company is about 12.5 years. Okay. And yet, the private equity VC fund lives still remain 8 to 10 years today. So if you are a PE VC investor and you invest in a company, and the company is still private, how do you then return money to your LPs who provided you with the capital in the fund, and get them to redeploy into the next fund, or really demonstrate that this asset class or private companies is a mainstay of your portfolio, right? So I think that's where you see not just small startups struggling with this access to capital markets problem. You see larger late-stage growth companies struggling with the same problem as well. And yet, the funny thing I would like to point out to the media is that the tech companies get a lot of the spotlight, but tech companies are tip of the iceberg. How about the rest of the iceberg? So the SMEs, right, traditional businesses. I think those guys are probably even less served, unloved by the capital markets. And yet, these SMEs employ majority of the people in most countries. How then do we serve them? I think that's how we started.
Yeah, I definitely see the value in that in terms of access to capital. But at the same time, if you look at an investor who wants to invest, in companies like that, back then, if you didn't have like $1 million ringgit, banks will not even look at you, will look your way. So I do see the value, in democratizing access. Can you talk to us a bit about that, and how does Alta aim to remove some of those obstacles? You talked about ticket sizes, so give us an idea about what you guys do.
Got it. So it started with regulatory, right? So we have to make sure that in the markets that we're licensed in, and we're licensed in Singapore, Malaysia, and Indonesia, we have the regulatory support to actually push through with this democratization of the asset class to as broad as audience as possible. And once that was cleared, it was really up to technology to reduce the ticket size. So we started out maybe back in 2016 with the minimum ticket at $250K US dollars, which is still pretty high. But we were the first to go below $1 million. And then subsequently, all the way down, kept pushing the boundaries. And today, we are at $10,000 US dollars for international funds, including single asset vehicles like SpaceX or even Discord, the company. And in Malaysia, actually, with our retail license, we can actually go even lower than $10,000. And I think that's where the big opportunity lies.
What helped push that ticket size lower?
I think when we first started, it wasn't just about us as a platform forming the hypothesis that this will happen. We also needed third-party service providers, so corporate secretaries, accounting firms, lawyers, to all buy in to that same vision. But obviously they were not going to adjust their rates as quickly, just because they have a cost structure. Headcount is going to be permanent for a few years. And since then, I think a lot more of the service providers have adjusted their cost structures, and also because public markets have languished. And that's where, if you're looking for your next deal, you don't really care much if it's going to be a public company or a private company. It's a service provider, right? And they started teams within their organizations to serve private companies, and a lot more tech companies came to fore. Obviously, the media helped by giving a lot of coverage to founders, as you do, and really to highlight the next generation of companies, right? So I think that's where costs paid out to third-party service providers really started falling, and that's where we could actually then pass on whatever we saved to the end investor.
For someone who does not know much about alternative asset investment, can you give us an overview, and what are some of the assets that are on Alta's platform?
Sure. Maybe I'll talk a bit about the private markets first. I think the private markets, there are two problems here that we see. The first problem is the problem of access, which is what you described. So can I get access to the asset class, right, and at a low ticket size as a regular person? The second problem in the private markets is really about liquidity. So after I invested in Grab before they went public, or SpaceX, or even a top-tier private equity fund, after 2 years, can I get my money back? If I can't get my money back, which is liquidity, I think most of us will struggle to see alternative assets being a mainstay part of your regular portfolio. And therein lies the bigger problem, right? If, as a regular person, I think a lot of studies around this show that we should have at least 10 to 15% of our personal investment portfolio allocated into alternatives, excluding your real estate or your home, today. And just so that the entire portfolio can hopefully beat the market return with inflation, which, as you rightly pointed out, is climbing. Most people today have 0% allocated into alternatives. And that's where we want to increase access. We have been, I think, very successful in terms of getting regular people access to international deals, Malaysian deals, or even top-tier funds. But we started thinking about, after you invest, how do I start trading? And that trading part, how do I get people to invest and then trade? So buy and then sell.
So a marketplace to...
Correct.
Okay.
What's the second problem?
Right.
And I think that's where the word private became alternatives, because it wasn't just companies anymore. We started looking at asset owners, so people that maybe even own rare assets like fine wines, rare whiskies, property, art. So I think that's where a lot of these asset owners are traders. And that's where, because the ticket size, investment bite size is smaller, we started seeing a lot of demand, not just to invest, but also to trade. And once the investor is within the alternative asset trading ecosystem, we can then direct some of the flows into serving the companies again. So I think that's where we broaden the definition of private into alternatives. And I think that's where, to one of the questions earlier on about inflation, you mentioned that how is the current environment with rising rates and inflation affecting us, with the real asset business within our platform, real assets being defined as anything that's tangible, property, fine wines, art, etc., is actually a perfect or really good hedge against rising rates and inflation. So a lot more investor demand. We're seeing a lot more demand in this space.
Can you talk about the growth of those assets?
Yeah. From an investment perspective, rare whiskies, rare wines, as an example, historically prices have trended up with consumption, especially from newer nations, including China, coming into the luxury market, but also within the supply space. Supply side of the equation, right? You can't actually produce more wine than the particular rare vineyard, as an example, can produce every year. The supply is fixed, but demand is increasing. So that's where a lot more price appreciation has happened. But if you think about not just the investment thesis, if I gave you a chance to invest in a wine, but it's through a fund, you don't actually get the tangible benefit of actually drinking the wine. That could be less appealing to some. So instead of a fund, which also adds a layer of fees to this investment for the investor, we decided to do it in the form of a direct asset-backed security. So security because it's still a licensed product, but every investment into that particular vintage or particular bottle of rare whiskey, rare wine, gets the investor the option to either trade away the security for profit, for price appreciation, or at the end of the period, cancel the security and take delivery of the underlying rare whiskey, which in the past would have been impossible to afford as well.
Yeah.
Because for these rare spirits, as you know, you would have to buy the entire cask, which would be millions and millions of pounds, and take delivery of 200 bottles of the same spirit, which is impossible to consume as a person and dispose of, would be a separate matter, right? So now you can get one bottle and enjoy. So I think that's the difference.
And this is made possible through the HGX exchange, which Alta acquired just November last year.
Correct.
And this is of course backed by tokens. And talk to us about that, how that has changed the direction of your business now that you have become not just a funding platform, but a marketplace.
Yeah. So in 2018, maybe Q4, the hypothesis that we had whereby companies were staying private longer, the funds were invested in, the previous generation of companies needed to return money, started coming to us for exits, for liquidity, for secondaries, which I think will continue to grow. We could, as a brokerage, cross direct buyer and direct seller for those company shares, but it would have to be exactly the right number of shares, exactly the right price. And that's where we decided that to scale the liquidity and secondaries business, we needed an exchange. In 2019, we convinced the top two participants on the Singapore exchange, Phillip Securities and Prime Partners, to actually also build the next generation capital markets with us. And with them came along their old network of investors and clients that we as a younger entrant to the capital markets will struggle to onboard. And they, with their high quality assets and companies, are actually ideal customers for our technology platform. With the exchange getting licensed in 2020 during COVID, we looked at not just companies, but as I mentioned, broadened the definition to include alternatives as well, because that's where we saw a lot of demand from clients in investing, right? And one missing piece that we uncovered in 2021 was that missing generation of younger investors who have somehow bypassed the traditional capital markets. They don't open stock trading accounts with Bursa anymore, or even the SGX anymore. Whatever is listed today are not appealing. They don't relate to these companies. And instead, they have leapfrogged and went to crypto exchanges.
Yeah.
What if we manage to find a way to bridge new world, which is crypto exchanges, with regulated world, which is us, and then find a way to flow these younger generation of investors back into the capital markets? Then maybe when the next tech company comes and lists on Bursa, we have younger investors with a different time horizon, whereby they have time on their side. They may be willing to take risk. They may be willing to bet on future tech as opposed to dividends, which is a yield type market, which is usually preached to. by the
So
old
can I ask you
generation.
that? Is that a direction that you're taking though, to expand the exchange to include other forms of assets, or are you focused primarily on alternative assets?
No, so it's going to be whatever the market demands, including private credit, debt, private assets. But it's really thinking about it from the point of that same investor who wants to invest in SpaceX, who wants to become an LP in a top-tier private equity fund, could also want to invest in whiskies, in wines, in property, etc., etc.
Or that coffee shop down
Exactly,
the mall.
which is the most exciting part of our journey in Malaysia so far. Most of us would love to invest in exactly what you said, the coffee shop whereby is just below where you work or stay. But we think that equity ownership as a form of ownership, basically equity as a form of ownership for the new generation of younger investors is outdated. The young generation may not have the patience to wait for an IPO or M&A, and why should they?
Yeah.
Most of these coffee shops, they don't actually get to a public exit. It's quite tough, right? So then how will capital be returned? So instead in Malaysia, we have actually pioneered a couple of interesting deals for such F&B businesses using redeemable convertible preference share structure, whereby every month you get paid out through revenues, your ownership will decline. So it's a naturally extinguishing ownership structure.
And this is via the exchange, or is that a separate
This is
platform?
via the Malaysia platform.
Okay.
So think of the business as a group now across the region, distinctly divided into three business arms with all different licenses. So we have the brokerage business, which is an investment bank plus sales and trading type capital markets activity, licensed in both Singapore and Malaysia. We have the exchange, which is licensed in Singapore.
Yep.
And then we have the fund management business, right? The exchange is the key. The brokerage and the fund management business are enablers of the exchange business to create access and liquidity in the alternative asset market. And that's where, even with the Malaysia brokerage model, asset owners or companies in Malaysia can choose to raise using the brokerage platform, trade using the brokerage platform, or list on the exchange.
Okay.
Right,
So you're
so as an
providing all the
alternative.
options available. So which leads to my next question, really. What is your vision, you and your co-founder, in terms of, I know democratizing access is one, allowing smaller businesses, the little guys, to have access to capital is another target here. But in the end, say 10 years from now, how do you view Alta?
I think it's about legacy infrastructure, right? So I think one of the interesting moments in my personal journey was really when my son asked, why did I have to travel again to the next meeting? I think I was away from home, from Singapore at least, 20 days every month. And in the past, in the bank, I would have just said, well, it's just to make money, right? But today, I think it's about building that next generation infrastructure so that when my kids have an idea in school, cobble together a business plan with some friends, raise capital, they actually have a functioning capital markets that will support their dreams, right? So that, I think, the legacy infrastructure that I hope to create across the region. We are not a Singapore business, we're not a Malaysian business, we're not an Indonesian business, but actually we are a regional play, if not global play, from day one. And it's actually part of that bigger vision that a lot of the capital market providers or experts had since 2009, 2010, whereby there was a topic discussed of forming an ASEAN-wide exchange, where everyone can actually benefit from a vibrant capital markets. Again, going back to the purpose of the capital markets must be to create jobs, generate employment, reward entrepreneurship, reward risk-taking, so that the next generation will thrive, right? And today, I think that has been decoupled.
It's super important because growing up in a household with little sophistication in investing, we invest in the very normal things like fixed deposit or unit trusts, which will push to us. So it's amazing that with this you are able to open up the access to people, regular folks, and also open up access to capital for the little guys, the smaller businesses. We do have a couple of minutes left. I do want to ask you about your plans for Alta and what is the target here. Talk a bit about Malaysia and how do you seek to expand your businesses here?
Sure, so I talked about tech being the tip of the iceberg. I actually want to focus on the rest of the iceberg, specifically for countries like Malaysia, Indonesia, whereby population pyramid is perfect. You have the mass consumer segment of part of the population, and you have very unique sectors like agriculture, which is key in food security, etc., issues. I think that part of the market will be the green shoots for the country this year and the next year, and it's in line with what the Malaysian government and regulators are also pushing players like us to support, whereby they do matching schemes. If an agri-tech company raises through us in Malaysia, there's very supportive matching schemes provided by the government, right? In terms of regional expansion, I think it's ASEAN exchange, definitely. So I think all the ASEAN markets, Thailand, would be a key focus for us. Bridging basically investor flows between the region and globally outside of ASEAN has always been the key. We don't need the largest market share for deals in Malaysia. I don't think that's the intention here today.
Okay.
I think it's always about bringing Malaysian companies globally and bringing the best of basically deals from the international community to Malaysian investors, right? So you get diversification in your portfolio as well outside of the country.
And tell us about what kind of industries do you think, industries in Malaysia that might fit on Alta platform that will generate the kind of interest that we want to see from investors?
So we have been looking at real assets again, so plantations, we've done fisheries, we're talking to a couple of asset owners, so buildings, commercial property, etc. I think it's a bridge between what investors are used to, comfortable with, but then we use technology to find a way to make a real asset. Previously, as you mentioned, only accessible by the ultra high net worth or institutional investors, available for the regular person today.
You're already in Indonesia, Singapore, Malaysia. There's so much potential there. So talk to us about your thought process and the key challenges that you have there.
Sure. So I think it's always a people business after all. So I think people is key, and we need to localize for every market we're in. So unlike the US or China, whereby it's single contiguous market, single framework, single infrastructure. I mean, obviously there'll be differences between states. In Southeast Asia, it's fragmented. But then again, it's also because of that it becomes very defensible for us. But in every country, we need great people to run the countries and localize.
How do you hyper-localize?
Correct. So hyper-localize. So it's not about every company must be listed in US or NASDAQ or NYSE. It doesn't make sense. It has to be hyper-localized for the region. The regional investors here or local investors here know the business, and they're the ones most incentivized to support the companies and the entrepreneurs. It wouldn't be an investor sitting halfway around the world in the US looking at a Malaysian business. Right, so hyper-localizing, but really finding key people in key markets to help build the team is the biggest challenge today.
Yeah. All right. Thank you so much, Kelvin, for talking to me about what Alta is doing and its goal, to make capital more accessible and investing accessible to everyone. Thank you so much, and best of luck with what you're planning to do.
Thank you.